Good evening.
Good evening.
I'm Himanshu and I'm from SAR Global. We are an investment banking firm. So first of all, I'll start with a brief intro about our company. So we have been, our company is relatively new. We have been in business for the last 3 years, but our directors are pretty old. I mean, they have over 40-50 years of experience in the same field. And we have raised over $2 billion for different companies. We have been involved in several mergers and acquisitions. We have even planned out 3-4 IPOs for companies. So I'll start with that. Okay. So what is investment banking, first of all? Investment banking, I mean, if you see movies and news, they have created a pretty bad image of investment banking. Like we are the, what do you say? We take your money and we invest it somewhere, and we do not give it back to you. So first to clear that up, I'm not in B2C segment, I'm in B2B, so I have no interest in your money. I have interest in your business. Okay. So we raise funds for companies in many ways. First of all, I'd like to tell you what are the ways in which you can raise funds. So basically there are 3 primary instruments through which you can raise funds. First is equity, another one is debt, and there's a combination of both known as venture debt or convertible debts. So first of all, what is equity? So equity is basically a part of a company, that is your shares, right? So what you do is you trade your shares for some amount of money. Next is debt. As Mr. Ravi will tell you that debt basically requires for a company to have some collateral in a traditional way, to have a collateral, some hard assets by which putting it at stake you can get your loan. The third one is convertible debts or venture debts. That is the new topic coming up. So in venture debts, unlike the traditional debts that require asset, if you do not have asset, it's fine. You can still raise venture debt as a collateral of your IPOs, of your IPRs, that is intellectual property rights, and of your shares. That is, I will give you a certain amount of money for some time, but in future you do not have to return it to me. Instead, I'll take your equity in the company. So it's like a equity, but at a later point of time. So it acts as a convertible. So these are the basically 3 ways in which you can raise funds. So now where we come in and what we do. So whenever an entrepreneur comes to us and asking for funds to raise, so fundraising is not just about raising the money. It's a very holistic process. First of all, we set up some goals, some thoughtful goals, and then we set up some procedures to how to achieve that goal. And to reach that goal, how much fund is required, we calculate that. And then we target certain investors and try to raise funds from them. And for entrepreneurs, that is the end of the business. But for us, that's where the real process starts. Because after that, we have to take care of the investor that invested in a company and make him exit out of a company with a much better valuation or with a much higher profit for him. So that is the part of equity. And when it comes to debt, there are certain ways for raising funds, and there are a lot of loans and banks that are coming up with a lot of new ways to give funds, and even Government of India is now trying quite hard to promote the entrepreneurs and giving them certain loans through schemes and many ways else. So I'll tell you a very good example as what we do and how it is much beneficial for our client. So I'll tell you example. In one of my deals, a client came to us and he was looking to raise 14 crores, that is $2 million. So, and his current turnover, that is his revenue, was around 45 crores. So he came to us, and at his current valuation, if he would have raised that 14 crores, he would have lost almost 35% of his equity. Okay, so now what we suggested to him was raise 1 million of equity at first point of time, that is 7 crores, raise 7 crores, and then for some point of time we raised another 7 crores as debt, not as equity for him. And then 1 year later we raised another 14 crores as equity for him. So you would be thinking, what's the difference? The difference is after raising the first 7 crores and continuing for 1 year, his valuation from 80 crores went up to 150 crores, right? So in a way, we saved his wealth of rupees 40 crores in just one transaction. So that's where the experience and that's where the expertise came in, right? And another example of, if you say, of debt. So one of our clients again was looking to raise equity, but his valuation was not up to the point. So if we would have raised equity for them, he would have ended up losing his his majority of the stake. So that's not we recommend to any entrepreneur to lose 40%, 50% of a company at initial point of time, because the entrepreneur himself will lose the motivation to work in his own company if he knows that he does not own 40-50% of his company. So we went for debt, and in debt we raised almost 15 crores for him, and now he has a valuation of over 120 crores as of now. So that's where we kick in. Now, why do you need an IB? I mean, this is the thing that most of you, many of the entrepreneurs think that they can do it themselves. And most of them come to us after trying everything that they can. And then they come to us. Okay, so what I'll tell you, why do you need an IB? First of all, the right choice of instrument, we will recommend it to you. We have the experience of dealing with all the clients, all the funds, and all the HNIs who invest in your company. So we will recommend you the right choice, that is whether to raise debt or to equity or to convertible debts. Now the next and the most important thing is we will recommend the right timing. Now timing, I would say, is the most important thing that any business should have at any point of time, right? I mean, if you start a company now of a cab service, it will be fruitless. Ola or Uber will eat you up. If you start a company even for a used car, it will the Cars 24, Cars Dekho, Cars Wale, which have already gone funding of over $110 billion of funding. They have gone from different investors. They'll eat you up. So we recommend you the right time, that when to raise funds, when to plan your IPO, when to go for the next growth segment. The next thing is the right amount of funding that you want. I mean, setting up financial goals is a quite difficult thing to do. I mean, as an entrepreneur, you know कि मेरे को अगले 4 साल में इतना revenue चाहिए, मेरे को अगले 4 साल में यहाँ पे, अगले 4 साल में मेरे को इतने clients चाहिए. But judging it from a financial perspective is a whole different thing. आपको पता है कि आपको इतना क्लाइंट चाहिए, आपको इतने रेवेन्यू चाहिए, बट हाउ विल यू रीच देयर? आप जो मार्केटिंग करोगे, आप जो आउटरीच करोगे लोगों को, उसमें रुपए कितने लगेंगे? आप जो अपना नया प्लान सेटअप करोगे, उसमें रुपए कितने लगेंगे? वी हेल्प यू विद दोज थिंग्स टू डू द रिसर्च फॉर फ्यूचर, टू डू द रिसर्च ऑफ योर पास्ट, एंड देन कमिंग अप विद द गुड अमाउंट दैट यू वांट टू रेज. एंड द लास्ट थिंग, इट्स ऑल अबाउट प्रेजेंटेशन, राइट? So we have been in this field for a lot of time. We know what the PEs, what the VCs want to see in you, right? We know how to paint the right picture of your company so that the PE and VC will take you seriously. So that's where we come in. Recently, in past 1 year, I would say, we have been acting as financial consultants and financial advisors for around 6-7 companies. We recently raised 15 crore debt and 7 crore equity, and right now we are in process of raising 70 crores for our FMCG firm, and that's basically us. And I would be happy to recommend to connect you with my clients, and I'm working on that for Shubhananji as of now, to connect him to one of my clients, and yep, that's basically it.